We might be completely in over our heads with this one. This is going to be our first property purchase in Valencia in 2026. But this is not our first real estate investment in Valencia. When we weren't living here, our strategy was pretty simple. We would buy apartments and rent them out long term. Because we weren't living in the country, that strategy actually made a lot of sense for us. It gave us relatively passive income, and there wasn't much to do in between tenants, but most importantly, it gave us a place to park our savings in a country that felt safe and relatively stable. And yes, we still own those properties today, but starting towards the end of 2025 and now going into 2026, we decided to change our investment strategy. Part of that has to do with price increases of real estate in Valencia, which I'll get into in just a moment. But it's also because we now live here. So instead of continuing with traditional rentals, we decided to take on a much bigger project with my husband, something that could potentially increase our returns and honestly also give us a bit of a challenge. So in today's video, I'm going to show you the property we bought, explain why we decided to go for this instead of a traditional apartment, talk about how the real estate landscape in Valencia is changing, what we were initially planning to do, how we found this deal, and finally, we're going to go through a bit of the numbers, including all the costs and rental projections. A little background on how we ended up doing this project. I previously ran an e-commerce business, which I sold a couple years ago, and because of our move, we also sold the apartment in Colombia. So between those two things, it gave us the capital to reinvest into something here in Spain. And instead of just buying a traditional Spanish apartment like we did in previous years, we wanted to try something a little bit bigger, shiny, and new. And one of the main reasons for that is because the market here has changed quite a bit. So what has changed in Valencia? Valencia property prices have increased dramatically. We're talking about roughly 35 to 45% increases between 2021 and today. And in some areas, prices have even increased 50 to 70% or higher. And there are several reasons for that. First, Valencia is quickly becoming one of the fastest growing cities in Spain. It's been voted several times as one of the highest quality of life, which has attracted a lot of international attention. Now you have digital nomads moving here, you have foreign buyers entering the market, you have retirees spending more time here and even moving here permanently. And at the same time, housing supply has been extremely limited. I'll go into that in a little bit. So naturally, when demand increases and supply stays tight, prices go up. That's essentially what has happened in Valencia over the past 5 years. So why did we still decide to buy even with these major price increases? We still decided it was the right choice to continue buying property in Valencia because we believe property will remain a solid investment for years to come. The first reason being that the population here is continuing to grow at a very fast pace. Like I mentioned earlier, you have all the retirees, all the digital nomads, all the remote workers. You also have all the international families moving here, all looking for better quality of life in Valencia. But you also have something else that's happening in the region, which is major industrial investments. Companies like Mercadona, which is a major supermarket here, have expanded their logistic operations. Inditex from Zara is definitely developing a logistics center in the region. There's also Volkswagen that's building a massive battery gigafactory in Sagunto, just north of Valencia, and that project alone is expected to create thousands of jobs. And when jobs come, people follow, workers move in, followed by their families, schools expand, infrastructure improves, commerce grows, and these small cities flourish. And all, of course, that naturally increases housing demand. But while all this growth is happening in Spain, construction of new housing remains very limited. Permits are still very slow. Construction costs have increased significantly since pandemic and will probably continue to increase even more so if gas prices go up with all the turmoil going on right now. And to top it off, the current government regulations have not made it easier to build at a pace that keeps up with the current population growth. So when you combine growing demand with limited housing supply, it's not hard to see why housing here continues to be a very attractive investment. What's interesting is that this deal was not found on Idealista. In fact, most of the best deals are not. Instead, we did something very simple. We went to the area where we wanted to invest and we walked into every single real estate agency office in that neighborhood. We introduced ourselves, We explained what we were looking for, our budget, our timeline, the type of return we were hoping to achieve, and then we stayed in contact with everyone. We followed up every single week so that when something interesting came in, they would take us into account. And eventually, one of those agents called us with the property that we have today. So before I tell you what we ended up buying, originally our plan was actually very different. We thought of buying an empty lot or a totally run-down house and building a brand new building from scratch. But once we actually started looking at the prices of those lots and the fact that we would be starting completely from zero, including experience, things started to feel a little bit risky. So first of all, the land itself was already really expensive, but we also had zero experience building from scratch in Spain. We didn't know the permitting timelines, the real construction costs. We didn't know how to evaluate contractors. And so the more we thought about it, the more we realized we might be in way over our heads. So instead of just jumping into something that large, we decided to pivot. And that's when we started looking at office spaces instead. The idea was that these spaces already have solid structures, strong walls, good foundations. So instead of building everything from zero, we would only have to renovate the interior. But of course, it still involves permits, construction, architects, and all of that. It would still be a risk for us and a huge learning curve, but it was definitely a lower risk than the original project. And that's when we found this property. So the property we ended up buying is a 182 meter squared ground floor office space. In Spanish, this is called a bao. It's located in Sagunto, which is where a lot of industrial activity is happening right now, which means that housing demand there is already increasing and will most likely continue to increase in the coming years as all the workers from all these new factories start to work. So the space itself has a large storefront, good natural light from the front, and access to a small interior courtyard in the back, which gives ventilation and additional light. But before buying it, we did have to do quite a bit of due diligence. First, we had to confirm that the building community allowed a change of use from office to residential housing, because in many buildings you actually need the permission of the community and your neighbors to do that. So we had to review the building bylaws, what in Spanish is called estatutos, to make sure that we wouldn't need any type of formal approval from the neighbors. Because if the neighbors say no, then you're stuck with an office that then we'd have to find another use for. So that process alone took several weeks. And originally, before we purchased, we hired an architect to come and take a look and give us a second opinion. And he told us that we could potentially create larger apartments with bedrooms in the front and bedrooms in the back, where the interior patio is, and as a result, we bought the property thinking that would be possible. But after we purchased the space, the architect came back to take exact measurements and the original plan changed. It turned out that we could not have bedrooms in the back because there was not enough natural light according to regulation. And so instead of few larger apartments, the only viable option became 4 studios. And on top of that, because the architectural project is priced per unit designed, the costs increased significantly. So that was not exactly great news to start with. So right now, the plan is to create 4 studio apartments of about 32 square meters each. Each one will have a small kitchen, bathroom, and living space. The idea is to target single professionals, young couples, workers relocating to the area, or even potentially retirees who want something accessible and without stairs. Maybe further down the line, we can start to explore different rental models. We can see if we rent them out long term, or we do midterm, or even potentially seasonal rentals, since they're all walking distance to the beach. We'll see. So of course, this type of project does come with risks. As we're diving into this new adventure, we never know if construction costs could increase, there could be delays, permits could take longer than expected. All of these things I know are quite normal. There could also be regulatory changes, and since these are studio units, there could also be higher tenant turnover. We're also completely new to this type of project, so yes, we're definitely learning as we go. So far we're just starting, but we've already had quite a few curveballs. The layout changed, the architect costs increased, and some of our initial assumptions turned out to be wrong. But I guess that's just part of the process. So why we're still doing it? I think most investors will probably walk away from a project like this because it involves a lot of work and you don't start getting a return on your investment immediately. There's renovation complexity, licensing, architectural planning, and a lot of unknowns. But those are actually exactly the reasons why we decided to buy it. because where many investors see a messy project, we see potential to create value. So now the big question is, do the numbers actually make sense?
So let's go over property numbers real quick. Here we have a nifty property analysis calculator. I plug in a couple numbers to see what kind of ROI each property gives. You can actually find this calculator in the link down below. I'll leave it in the description. So let's go ahead and see what kind of numbers this property is currently giving us. The property cost us 130,000 euros. We buy in the region of Valencia. So here, by choosing which region, it will calculate the tax you have to pay. We actually ended up paying a little bit less because we paid a part cash. On top of that, you need to take into account the notary and registry fees. These are fees that we paid upon signing. The agency commission fees plus the 21% tax. I had a screenshot of how much I paid, so I plugged that right in. And now we are currently quoting different construction companies. We're getting all types of estimates, but it seems that the average is 120,000 euros. We hope to go below that. Then we had to hire the architect. The architect is the one that not only does the design, but he's the one that turns in the project to City Hall, gets it approved by City Hall, and oversees the construction, make sure everything is up to code so it can pass inspection at the end. Then we also have furniture and kitchen costs. So we're going to need furniture for the kitchen, furniture for the bathroom, furniture for the bedroom, all these things. Like it's 4 units. I estimated 7,000 euros per unit. These are functional studios with the basics, right? So these are usually furnishings from IKEA and similar stores. Then we have the City Hall tax, missing an L right here. The City Hall tax is 3.55% of the declared construction cost. Next, moving on, let's look at our rental income. So these studios, we hope to put them together to be better than the average studio you can find in the area. And so we did a little bit of market research, saw what studios are currently going for. And right now they're going between 600 and 650. Like these studios will be ready end of the year. We hope to be able to move them for 650, which gives us a total rent per year of 3,200. Of course, we do take into account vacancy rate, which is quite low in Spain. Everything rents out really fast. So here we do take into account a vacancy rate, which is 5%, which I know is quite low, but we are doing long term for now. We're taking into account that it might be empty for a couple of weeks, but things get rented out here very quickly. We're also taking into account annual appreciation at 10%, which is actually very conservative, as in the past year, Valencia has seen an appreciation of 24%. Of course, at some point it will stabilize, so we put it at a very conservative 10%, as well as increasing annual expenses and revenue. So now, let's look at expenses. What expenses will we have? Advertising, this is totally discretionary. Maintenance fees, we put a reserve of 5% for anything that breaks down. It could be a leakage, it could be a plumbing, whatever. We put a 5% reserve. Community dues, there are none because this is not part of a community. There is also home insurance. So remember, this is for 4 units. Then we have rent default insurance, which is also optional. We choose to have it, which is basically insurance that if the tenant does not pay, the insurance will kick in and pay us the monthly rent. Then we have property tax, which is yearly tax. Remember, this is for 4 units. It's quite low. It's an estimate because the units are small. Right now, we're paying for 1 or 2 bedrooms in this 80 meters squared, approximately 250. So I put a little bit less, but it might actually be a lot less. And we have garbage fees. So garbage fees are 65 euros every time we see the bill come in, twice a year, times 4, and it comes out to this. So what are we looking at? So the total sale price with everything included, notary, the taxes, agency fees, came down to 146,590 euros. But on top of that, we're going to have to take into account all the additional costs to turn this office space into studios. We are projecting an investment of 164,844, which comes down to a total of 311,434 euros. Now, I'm going to scroll down real quick at the bottom to show you a couple things. There's also another expense to take into account because after you receive income, you do have to pay tax on the income earned. And so here it has calculated that I will need to pay 5,928 euros of tax. And you can see this by going in the tab calculator. You can choose whatever is your status and it will calculate the base and how much tax you should be paying. So in my case, it's 5,928. And it takes into account, of course, the same costs that are above. So you can see the costs that I'm going to incur, how much I have after all taxes and costs. And now the real important part is let's look at the numbers. So I'm going to go back on top. And here I see that this gives me a gross profit margin of 10%, which is actually very good. And after all taxes and all expenses of 6%. So this is a very safe investment. We do have a couple ideas which we can explore further down the line to optimize, but we'll see that later.
And that's the full picture. So those are the numbers, that's the plan, and that's what we're hoping this project will turn into this year. Now, of course, I don't expect everything to go exactly according to plan. The numbers might be off, there might be discretionary expenses, and we're definitely expecting there to be quite a few more curveballs along the way, but that's also part of the process. I'll be here making more videos documenting our process, the renovation, the timeline, and the final result. So be sure to like this video if you found it useful and subscribe to follow our investment journey here in Valencia, Spain.